Hey everyone, welcome to the weekly review. This week we had a cold CPI print and then the hot PPI print, and that kind of fucked everything over from my expectations. Even though we didn't pull back very strongly for IWM, we shall see how it plays out. Now, let's look at the PPI print because that's the main topic for the day. This is inflation versus CPI versus PPI. PPI is in white and CPI is in purple red. We only have bad data going back to 2010 or 2009 actually, and there's only a couple of times where we had this huge beat in PPI relative to CPI. One was here, and it didn't cause an immediate spike, but we saw this spike in inflation later on. Then we had one in 2018, and basically this is when the correction for the 2018 end of year correction started and lasted until December. December was the Christmas was the bottom, something like that. And the final one that I found was this one in 2001. This is basically the precursor of the inflation spike that happened in 2021 that led to the Fed hiking in 2023. They ignored it, and this spike in inflation is what followed. This time, I am sure they will not make the same mistake. And my thesis was that the inflation spike would come later, uh, and or the inflation increase would be benign and be spread out over multiple months so that we would not get a big spike or a big increase in inflation for a while, if at all. Now, one of the reasons why I expected this month's CPI print to be small or in line, and it was because last month PPI was zero. This was the print from last month, and usually CPI follows PPI with a 1 to 3 months delay, usually more towards 1 month. Now we had a huge PPI print, like 0.9 is catastrophic print. It's not big, it's catastrophic print. And you do not want to see this. Furthermore, when we look at the year-over-year change, we see this CPI is still in a downtrend, while PPI is in an uptrend, making both higher highs and higher lows. And this spike here is bad. We should be seeing CPI starting to turn up as well. And this doesn't happen often, like here in 53 a long time ago. We see PPI making higher lows while CPI is making lower lows, and inflation spike followed. I think there were a couple of more, but I don't remember exactly where it was. Let me see if I can spot another one. Here, this was 71. PPI lower low. CPI was still making a higher low, sorry. So, and again, inflation spike followed. Uh, it's not a good sign. And when we compare it to the jobs market, which has held pretty firmly up until now, uh, this is employment population ratio, and all the other ones are inverted. So basically, the higher number is going down. This is unemployment rate as a percentage, unemployment level as a absolute number, and we can see that our absolute number has increased more than percentage. And this is continued claims average, 4-week average. So no rollover in claims until that happens. I don't think we will see a big spike. Given this, unless the next jobs report that comes at the end of the month is very hot, I would say Fed will err on the side of inflation with 80% probability, and or weight, 80% weight. And this means absolutely no cut. I think we are at risk. We have a higher chance of getting a hike than a cut at this moment. Like depending on how hot the inflation print will be, because we get another one next month, and if PCE will be hot for sure at the end of the month. If CPI is also hot to the same extent as PPI was hot this month, we are basically fucked. I think we're actually getting a hike if that happens. So pretty bad setup. Um, and again, until we see a rollover in continued claims, I don't think we the Fed would care that much about the jobs market. That scare was fine, and there's also like the revision that caused on September 9th. So we have two jobs data stuff. We have unemployment and ADP and NFP at the end of the month. Then we have on September 9th, we have the annual revision of jobs, which should show a big revision down, but again, we shall see. And at the same time, we have PC and CPI on the other side. So whichever wins this battle, and we don't know who's going to win, will influence the Fed. The most likely outcome is no cut. Just keep it steady, and I think this like has an 80% chance at the moment. Then we have 15% for a hike and 5% for a cut. I think the cut is completely out of the picture right now. But again, we shall see. Okay, now we have Jackson Hole next week on Friday and Saturday. Here it appears on Saturday, but J Powell's speech is here. And there is no data to change J Powell's mind until then. We have some PMIs, we have house starts, building permits, stuff like that, but it's sort of irrelevant. And nothing on the jobs data. Maybe some wiki claims. If we get a spike, maybe he changes his mind. But by the time JPOW does his speech on Friday, there will be no new data. And the most recent data we have is that PPI was hot as fuck. We will not get a dovish JPOW on the speech. He will not confirm any cut. He will most likely won't confirm anything, but he will say we need more data and we will not cut, basically. And this is bearish. When we look at the market on other topics like breadth, uh, sort of a recovery, but lower high. NIA is back in the red. McLaren oscillator, sorry, McLaren oscillator is back in the red. This made a lower high on a higher high for the market. uh, Not Nia, but you get the point. No impulsive move. We had like an 80 and a 70 something. We have an 83, 82 and a 79, but no signal. And this looks to be turning down again. So even if we get that rotation into IWM and on Friday a bit of a rotation into DIA because of UNH and uh, here like mega cap sold off a bit, semi sold off a bit, financial services and banks sold off a bit, and rotated into healthcare, rotated into software. That was kind of it, and a few real estate because again, Berkshire bought home builders. Uh, that's kind of it. This was healthy for the market, like it was 50-50 on a UVOL DVOL part, but are we actually going to get a big impulsive move where everything is green? Like we either get mega caps and a few other names performing and everything is more or less red, or kind of a rotation days in which we get small caps rallying, again mega caps weak, semis weak, and so on. And I don't see a scenario, given our circumstance, in which the market finds enough momentum and strength and liquidity to push everything up to give us a more impulsive move. And when we look at VIX as well, let me switch back and VIX. The times when we would get a breakdown and a drop to new level, like we have the 15 level, then we have the 12 level, 11, 12 level. When we drop below, uh, usually we have an impulsive drop. Like this one didn't count, we went slightly lower, but it returned quickly. But this one, we closed below 15 and then another 3% candle lower. We pushed lower immediately. Then we tried to go up again, got rejected at 15. We pushed back to the lows. Then continued down, and so on. Or where here we dropped to 15, immediately 8% candle push lower. So this isn't happening, or here we tried to save a bit, but then push lower, eventually we went lower. This isn't happening right now. It looks more like support. We had a close below 15 with slightly lower prices, but didn't really hold. And on top of this, when we look at VIVIX, we see higher lows on VIVIX. And this is a precursor of moves in VIX, like when we add VIX to this. Okay, so we have this divergence. This is VIVIX, and this is VIX. So one making lower low, the other making higher low. This again, this is a precursor of a moving VIX. Like for example, here, same thing happened. We had VIVIX going, making a higher low, and VIX making a lower low, like this. I can find others if needed, but doesn't change the situation a lot. Like this is a common pattern and a warning sign. So Brent hasn't really improved. VIX hasn't really dropped below 15. The Fed is going to be bearish. We also have the plethora of bearish porn charts that surfaced this week. I picked a couple, like weight of top three holdings between 1980 and 2025, and Nvidia plus Microsoft plus Apple at like 23 something, way above anything we had in the past, even the 2000s bubble. uh, the top 10 weight is like 38%, something like this, again highest in history. The market is super fucking concentrated, which is usually a sign of a bubble and not a good thing. Then we have S&P price to book value. We are above the dot-com bubble. Price to sales ratio. We are above the dot-com bubble, and above the 2021 bubble. Not the dot-com bubble. This is dot-com. We weren't even that high in dot-com, but we went higher than we were in 2021, at the end of 2021 as well. And we are very far from the median. Like we are double and a bit relative to the median. Look where we were in 2008. So again, very stretched. Then systematic equity position. I actually checked this one against price, and it sort of correlates well with tops. Not perfectly, obviously, but this was a top. This was a top. This was smaller correction. Generally, all of these things, when you see a local high, they were either a small correction or a big correction. And like this one was a big correction. This one was a big correction. This is COVID. So generally, this tracks well against corrections. Then we have basically S&P information technology versus the S&P total, and we are above the dot-com bubble. Nasdaq market cap relative to M2 money supply, we are above the dot-com bubble. New York Stock Exchange available cash versus money supply at dot-com level bubbles. And this one, combining trailing P, 4P, CAPE, price to book, blah blah blah, everything you see here. And we are at 1929 level, above the dot-com bubble, above the 60s bubble, and so on. So absolute bear porn. Thing is, this was like 2 years, like in 1960. It was 1966, but probably this took from 1964 until 1966. So same, this was 1991, but the bubble popped in 2000s. This isn't a sign of a top. This could stretch another year or so, even if we are super fucking stretched. And most likely the top will come below, like it came in March 2000. So somewhere around here, I don't know, something like this. So we were already going down when the bubble popped. Um, so yeah, bearish Fed, at least per my expectations. Potential for an actual hike if inflation is hot and jobs doesn't break down. Russia thing might be a nothing burger, but we shall see what happens on Monday. I don't have any high hopes. Uh, but if we go down again, it will take a while. I think we do like around the top. My assumption is that we start from here. Basically, this will be our range, and we do something like this. So this is my expectation, like around the top, and it will take a while to move in this area, potentially until end of month. This is Friday, so this is when J Powell's speech will be. Uh, and when we do break down, we have room to drop, but again, we shall see. I will evaluate it on a case by case basis. We also need to see, most likely this area here would be the target, like 620 and the quarter open area. I would not like to see the quarter turn red from a bullish perspective. Like if we turn the quarter red, I think we go much lower, like to the yearly open. Like this. So yeah, lots of uncertainty. Very, very, very toppy vibes. That's all I can tell you. Hope it helped. Have a good one. Bye bye.